Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model review for Friday the 22nd of October 2021. Time is just coming up to 4:30 in the morning, 04:30 GMT. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, Thursday the 21st, yesterday then, we had a positive opposed driver in the yen at plus 173. Front and back door flows mainly coming out the pound at minus 111, out the euro at minus 92, and the dollar is the positive rock at plus 30. Activity plus or minus 203. Intra-week then, this is the most relevant because it's from Monday, was it the 18th, open to about 15 minutes ago. We've got a negative opposed driver in the dollar at minus 94. Front and back door flows, but we've got a joint term mover and secondary driver just to complicate it. But we've got front and back door flows anyway, going equally into the euro and the pound, plus 51 apiece, and we've got the yen being the negative rock at minus 8, activity plus or minus 102. So yesterday we saw a bit of yen strength driving, which is for a change because the yen has been driving negatively last week and the majority of this week. So we saw yen strength and we saw pound weakness. So the flows were basically reversed out from what we're normally used to recently. Excuse me. And over the week then, you can see that the yen has been replaced as the negative driver by the dollar, minus 94. On activity of plus or minus 102. So the activity for the week is quite low. It could be because we've had this reversal. Anyway, intraday then, this is the Asian session to about 15 minutes ago. We've got a negative unopposed driver in the yen again, minus 33. Front and back door flows mainly going into the euro plus 25, into the pound at plus 8, and the dollar is the neutral rock at 0. So that's on activity plus or minus 33. We'll stop it there and write up the flows. Right, we're back, we've written up the flows then. So the euro is weak except against the dollar, the yen and the pound. So they're the majors. The yen is weak across the board. The pound is weak except against the dollar and the yen. The Swiss is strong except against the CAD, the AUD and the NZD, the commodity currencies. The CAD is strong across the board. The AUD is strong except against the CAD and the NZD. The NZD is strong except against the CAD. And the dollar is weak except against the yen. So what have we got? We've got yen weakness again. So this is the old game from a week and a half ago. And we've got CAD strength. And you can see that you've got strength in the commodity currencies with the CAD the strongest, the New Zealand next, and the AUD following that, and take your pick in the middle. Right, so what's going to knock it about? Well, today, Friday then, we've got GBP Tier 2 retail sales, and we've got a raft of PMIs. So we've got German PMI, Euro PMI, GBP PMIs, produce inflation data, and we've got CAD retail sales. The other news, we've got this Evergrande, which is this like massive property company in China, has made a debt payment. So that's champagne corks popping all around there. So, but obviously they're still under the cosh. They're just sort of staggering around completely. Their gearing is obviously out of control, and they can't stand any downturn in the market. So watch this space, and they're probably being propped up by the Chinese government. Right, and we've got next week, peering into next week, we've got Wednesday the 27th, we've got US durable goods and CAD rates decisions. So they're the main events sort of coming through. Right, so let's stop that there and write up the asset classes and then do the final analysis. Right, we've written up the asset classes then. So US dollar index basically originally pumped up, came back. It's now 0.33 from the high, so it's come off a third, 33% from the modelled high. So the dollar is relatively weaker. Gold, in theory, should like that. It's still not half marks, 0.545 from the floor. So it's just below half marks. Gold not really recovered properly. Oil did this big break, and it's come off from its resistance break about 0.12. So it's come off about 12% from the high, but it's still well above the break. Right, so Wall Street, S&P Tech. Wall Street and the S&P are at or near their highs, and the tech is lagging. It's 0.22 from the high, so it's 22% off the modelled high. So that's something of interest. We'll talk about that in a minute. And then you've got US 10-year in the bund. This is the price. The price has been depressed. It's done broken supports on both, and we've got this strong environment of yields at the moment in the US 10-year and the bund, and they're fairly balanced. Copper's been chopping about. It did a break. It's now come back. It's 0.29 from the high, but above the break. So it's 29% off the high, but above the break. And US steel is still messing about on the floor. Really, it's 0.20 from the floor. It's 20% above the floor. So that's where we are there. So let's just get rid of this and then do the final analysis for today. So we've got this situation where we had a little bit of yen strength yesterday, and then we had a turnaround. Interestingly, just grab this. Interestingly, early on in the Asian session yesterday, we were fully risk on, and then at about, I don't know, 6 o'clock-ish, it changed to risk off, and then you started to see this yen strength come in, and that's what we ended up with yesterday. We ended up with yen strength driving. So anyway, let's have a look at the majors. So you've got the dollar, the euro, the yen and the pound, and we've got the CAD, the AUD, the NZD, and we've got the Swiss here. So now, so we've had this long period of yen weakness driving. Yesterday we had a bit of yen strength, and now we're back into yen weakness in the Asian session. The dollar's basically come off, what is it, about a third, so it's come off about 0.33, and the pound has been attracting the bulk of these positive flows, and then the pound actually started to come off a little bit yesterday. So that's where we are there. Now, if you look at the tech's lagging in some respects. What is it? It's lagging. It's about 22% off the modelled high, whereas the Wall Street and the S&P are at or near their highs. And if you look at the drivers of tech stocks, so tech stocks. So you've got the market itself is a driver. So tech stocks tend to go up if the market goes up generally. What else? If manufacturing output is strong, then tech stocks tend to go up. The third one, short-term interest rates. Short-term rates, if they're viewed to be going up, tech stocks go up. And oil prices, if they're going up, you tend to get so all those tend to be drivers for a positive tech. Now, why is the tech lagging when the other two are at or near their highs? And we've had this we've had this bounce in the market, and yet the tech hasn't caught up. Manufacturing output arguably not disastrously, but and in the US it's relatively stable. And the interesting one is this short-term interest rates and the oil price. Now the oil price, will start with, the oil price has clearly come up, and yet top tech stocks are still lagging. And the short-term interest rates then. So this is a bit of a clue. This one is the critical factor as far as we're concerned, is the short-term rates. Now, if the market fully believed that short-term rates were coming up, then the tech stocks would tend to lead, because they're sort of geared in that way. They would tend to lead the other two indices. They would tend to lead Wall Street, the Dow, and the S&P. But we're actually seeing this disconnect between the bond market and the equity market and asset classes in general. So you've got this general favourable environment for tech stocks, and yet the tech index is lagging. And the only one you could argue where the problem is on this short-term rates area here. So if the tech stocks are to be believed, then and you can see that the dollar index is coming off, the dollar's starting to soften again. You've got this idea of that inflation is not going to be an issue in the US, and the bond market is likely to about turn then. So if interest rates, short-term interest rates, were going to be flying, you'd see the tech index leading the way probably. So that has implications for the dollar. So the dollar is likely to be soft going forward. So that's the conclusion we can draw from it. And if you get a soft dollar, you're going to get a very positive commodity environment, and you're going to get a positive equity environment as well. And then eventually you're going to get a catch up in the tech itself. So the likelihood is we're going to see a soft dollar coming through. Whether it happens today or not is another matter. But we've got all this PMI data. So I'll watch out for a soft dollar coming through. Off the back of this inflation data, and the market may be coming to the realization that the inflation is indeed transitory, despite the rises in imported inflation via oil and all the rest of it. Anyway, that's where we are. And if you get a soft dollar, you'll get a very positive pop in the other indices, equities. You get this yen coming off again, and we've got the yen negative in the Asian session, etc. So, and if you get that, you'll get a rise in the euro and the pound by default. So that's where we are. Watch out for that. You've got all this PMI data coming out today, which is going to shake it up. But at the backdrop, look out for a potentially softening dollar, and that will lead to a weaker yen and risk on. So I hope that was useful. See you tomorrow for the review roundup of the data cycle and all the rest of it. If not, see you Monday for the daily briefing. Goodbye, thanks for watching.